Metal stocks were the highlight of today's session as China's anti-evolution drive gathered momentum along with hopes that the US Fed may cut rates in the middle of September. The metals index was up over 2% today. You're with us here on Markets Forward and your go-to show where we aim to get you all the key data points to gear you up for the next trading day and of course look back at how the day panned out. I'm Homes Patakia. With me is Vamakshi Thoria. Vamakshi, well, yesterday's session left a lot to be desired, but today there's no reason to complain and we are almost back at the same levels on the index from where we had reversed in yesterday's session.
Well, absolutely. Good evening, Hormas. This session today actually reminds me of this one saying, der aaye but durust aaye. But so that's what panned out this time around. The Nifty picked up pace in the second half of the day. The Nifty ended the day almost 130 points higher, and it was largely the metal pack that continued to shine in trade today, up almost 3%. Gains were largely led by Tata Steel, Jindal Steel. Apart from that, the pharma pack did extremely well. Pharma was up almost 1%. The PSU bank pack also contributed. But on the flip side, what did not do well is IT. Most of the stocks in the IT index were lower. Infosys was down almost 1.3%. Coforge was also down almost 1.3%. But we have an action-packed show lined up for you today. We start with the top movers and shakers of the day. We'll then focus, on the stocks that are in focus. Indus Towers, which slipped on the back of its African foray, while TBO Tech was buzzing on the back of acquisition news, and Netweb gained on the back of an order win. And last but not the least, we delve into the key market events to watch out for tomorrow's trading session. But on to our first segment of the day. Let's go across to Hormas and understand what were the stocks that moved around in trade today. Hormas.
The one pack that took the limelight in today's session, of course, were the metal stocks, and you pick up any metal stock and they were in the green today. It was a shiny session for all of these metal names. Take a look at Tata Steel, 6% higher on the stock. JSPL also with a 5% gain. SAIL with a 5% gain. Nalco, Hindustan Copper, Vedanta, all of them seeing healthy gains in today's session. What also saw healthy gains were the pharma names. Predominantly the mid-sized pharma stocks were the ones that outperformed today. Piramal Pharma was up 8%, also closed above a key moving average. Solara was up almost 6%. IOL Chemicals was up almost 7%. Similar gains also seen in Glenmark and in Ajanta Pharma as well. So a healthy day for pharma names. The other pocket that did well were some of the newsmakers in today's session. TBO Tech, of course, on the back of the acquisition, 15% higher on that stock. Netweb on the order win. Acme Solar on the order win. TD Power spoke to us earlier in the day and they mentioned that they are going to raise their revenue and order inflow guidance, not just for this year but for the next one as well. And Lupin on the back of the drug approval that it received earlier in the day, 3.25% higher on that stock as well. There are multiple names that ended at a 52-week high in the broader markets. SJS Enterprises was one of them. Cartrade, India Cements and Sagar Cements, the two small cement names. And Sirma SGS did not move on the news yesterday but moved in today's session, ending with gains of around 5%. But of course, there were some stocks that bucked the trend as well in the broader markets, ending lower. And Global Spirits was one of them. And Aditya Vision, Lumax Auto continues to decline. Sharda Cropchem and JK Cement were some of the other names that saw some bit of profit booking in today's session, Vamakshi.
Well, thank you so much for that, Hormas. But it's a good time to go across to our guest Mayuresh Joshi, who's the Director of Research at Marketsmith India, and Shrikant Chouhan, who's EVP at Kotak Securities. Well, good afternoon to you, gentlemen. Let me first start with you, Shrikant. The move today, second half of the day was extremely good, especially if you're a bull. Where does the market go on from here?
Good afternoon, Vamakshi, and good afternoon, Horvas. For Nifty, one thing is very clear that it is finding difficulties to sustain at higher levels. Today, we saw broad-based activity in the market. Pharma, bank, and number of few real estate stocks did well from their lows. The overall activity was much better than last few days. But it is still struggle that we are seeing in the market. It is not, I mean to say, the market is finding a lot of difficulties to move higher. Today's support from the Bank Nifty and the overall outperformance from the Bank Nifty indicating us that we may see further more upside in the near term. But to erase the real bearishness of the market, we need market to cross the level of 25,200 decisively. Till then, we are expecting market to consolidate within the broader range of maybe 25,000 and 24,500 on the downside. I think we need to be more and more stock specific in this market till the markets are not crossing 25,200.
Just before we get chatting with Mayuresh, Shrikant, thank you for joining in. The Nifty Bank, as you mentioned, has been the pain point, right? It's been the reason why the Nifty has not managed to go higher, and has been the reason for its underperformance as well. The bounce that you saw today, a 400-point up move on the Nifty Bank, do you only see that as a tactical bounce? What level does the Nifty Bank have to cross to reverse the bearishness that it currently finds itself in? Because it has been a bigger underperformer compared to the Nifty.
Yeah, I think 54,000 was the level, and today we saw the Bank Nifty was comfortably crossing this level again and again. While looking at the entire setup of last 3 days, there was good amount of hammer hitting close to 53,500 sort of levels. But the Bank Nifty managed to survive above those levels, and today it recovered back and it closed above somewhere close to 54,000 levels. So broadly, I am of the view that Bank Nifty is ready to move towards the levels of 55,000, and that will help the market to do well. So Bank Nifty looks like out of woods, and we can see further upside in the near term.
All right, expect further upturn in Nifty Bank is what you're indicating. But, let's focus in on Indus Towers, because that stock slipped in trade after a board allowed foray into the African market. While the move is considered positive, it will fit well with the investors. Reema Tendulkar tells us about this foray and what are the brokerages saying about it. Reema?
Thanks so much for that. So Indus Towers, as you rightly pointed out, was under pressure because this company's foray into the African market, starting with Nigeria, Uganda and Zambia, might affect the company's potential dividend payout. Remember, historically, Indus Towers was a dividend-paying company. Then there were troubles, receivables from Vodafone Idea, and that put a lid, or the company paused on its dividend payouts. But now that the situation had improved and the company was getting all the money from Vodafone Idea, the street was hopeful about this dividend payout resuming at Indus Towers. But now again there is a question mark. Will there be a delay? Will the amount get cut? Which is why CLSA, although has a high conviction outperform rating on Indus Towers, lowered the target price to 520. They said that we expected the management to focus on the capital structure by paying out high dividends. And now there is this unjustified delay in dividends. Citi, on the other hand, continues to remain bullish. The target price is 460. They believe the concerns are overdone. The valuations are fairly attractive. In fact, according to them, the bear case for Indus Towers is 300 rupees, and the stock is not very far from that, which is why the downside from here on is limited.
Reema, thank you for that. Mayuresh, Indus Towers, the stock is already down, 30-odd% from its 52-week high. And the dividend payout may have been delayed, but the prospects of a foray into Africa, the correction from the record highs, does that make it an attractive enough bet? And once that bet sooner or later pays off, hopefully the dividend payout would also return? Your call here.
Afternoon, Hormas. I think the eventuality in terms of earnings recovering over a longer period of time might be a possibility. But from an immediate perspective, getting into the African markets, it's a hyper-competitive market. And therefore, I think how much of capital allocation will actually yield what kind of ROAs and ROCs, and if any, because of the competitive intensity, whether this gets delayed for some reason or the other by a few quarters, I think that can have an impact on cash flows. And therefore, as Reema was pointing out, the fear on the street in terms of their dividend payouts as well. The second aspect, as far as the domestic business is concerned, largely, I think, dominated by both Jio and Airtel. And as far as their tenancy ratios are concerned for both these major players that they probably service, I think a large part of that tenancy ratio stability should be maintained. So I think an exponential growth in tenancy ratios and margins on the Indian front seems to be very, very improbable at this juncture. Last but not the least, I think with expectations of some element of balance sheet recovery that was happening over the last couple of quarters, this fresh capex plan again puts a lid to return the ratios. So in our opinion, again, I think the rating rankings look very, very weak, and therefore we carry a neutral view on this time.
All right, thank you so much for that, Mayuresh. But let's also put the spotlight on Netweb Technologies. The stock jumped after it received purchase order for the supply of servers based on NVIDIA's cutting-edge Blackwell architecture. Vinny is here with more details on this order. Vinny?
Hi, Vamakshi. Yes, we saw the stock closing with gains of, almost 11 to 12% in today's trading session. And like you mentioned, this has come in after they've received that purchase order for supply of servers based on NVIDIA's cutting-edge Blackwell architecture. Now, obviously, do not forget in 2023, sometime they had signed a partnership with NVIDIA, and that is why they do have this technology available, which is backed on by NVIDIA. Now, this is an order size of around 1,734 crore rupees, mainly for deployment of AI infra facility using GPUs and accelerated platforms. And overall execution time is by first half of FY27. So in 12 months time period, they will be completing this order. So positive for the company. Why? Because that means in FY26 and FY27, you will see additional revenues coming in. Order size is really big, right? It's 102% of what analyst sales estimates were of FY26 and 72% of FY27 sales estimate. Do not forget, for FY25, the revenue for Netweb was around 1,149 crores. As of now, if you look at it in terms of, comparing it with the sales and the order, it's 1.5 times that of FY25 sales as well. So a huge order that's come in for the company. This could maybe lead to some better growth in terms of the revenue for the company. Growth driver is what we're watching out for FY26 from this revenue order that has come in. And that's a big one for the company.
Vinny, thank you for that update. Mayuresh, Netweb Technologies, the order size almost 12% of its overall market cap. IPO'd a couple of years ago. The stock is already up 5x from that IPO price. And this is after correcting from its 52-week high. Your call on Netweb, and does it still warrant buy interest, especially for the prospects that lie ahead for the company?
So I think if you peg numbers, Hormaz, in terms of what is expected to come through by the guidance that they've probably given, and if you probably peg in an FY27 or an FY28 exit based on the numbers, I think it is priced to perfection. So again, I think from a valuation standpoint, from a price action standpoint, I think valuations have probably peaked off. Obviously, if they're able to outperform their guidance in some way or the other, maybe the premium valuations and the re-rating that the stock is probably getting at this juncture might sustain. But again, I think it really depends in terms of their numbers delivery. At this juncture, I'll be tempted to say that it's priced to perfection from a valuation perspective.
All right, thanks for that, Mayuresh. Now, Shrikant, I'd actually like to ask you about Ola Electric. Over the last couple of sessions, that particular counter has been doing extremely well. Today as well, the stock managed to post a gain of almost 11%. So do you have a view on this counter, chartically speaking?
Yeah, the stock is doing really well. It is forming higher top, higher bottom series on a day-to-day basis, as well as we are seeing very strong, extraordinary expansion in volumes as well as delivery-based volume. So while looking at its entire technical pattern and the way it recovered from the deepest, lowest level of 50, 40 something, we are of the view that the stock is in the process of retracing to its entire fall that we saw from the highs of almost 155, 150. So in case if there is any furthermore, I'm going to say the way there is a formation, the very high chances of hitting 80, 85 sort of levels, because it has crossed almost all its important level like 58, 68. These are the levels where we were expecting some resistance, but the stock has managed to surpass these levels along with good volumes. I'm of the view that the first target is 85, and in the best case scenario, the stock may even hit the levels of 100, where it has spent a lot of time when it was falling from the highs. So yes, there is like a lot of scope that the stock can do well. In case if there is any correction, then close to 60, 62 sort of levels, the stock is having very good support.
All right, thank you so much for that. But moving on then, let's also talk about TBO Tech because the company is expanding its global footprint with a major acquisition. The company has announced plans to acquire US-based Classic Vacations from Phoenix headquartered investment firm, the Najafi Companies. Mangalam is here with more details on this. Mangalam?
That's right. TBO Tech was among the big gainers in today's trading session after an acquisition announcement that the company made late last evening to the exchanges, where they said that they will acquire US-based Classic Vacations for about $125 million, which is roughly amounts to about 1,100 crore rupees in INR terms. Classic Vacations is a company which has a network of luxury travel advisors and suppliers. So the one thing that we know about the travel industry right now is that the luxury tourism is outpacing overall tourism industry, which anyway is on a strong growth trajectory. Classic Vacations, last year's revenue were close to around 1100 crore rupees, which is $111 million, and they were at about 10% operating EBITDA margins. Overall, in terms of TBO Tech's revenue accretion, this would be up to 50-55% sort of revenue accretion. So it may be slightly margin diluted from 16% to close to 10%. So we'll watch out for that. And the cash and equivalents that TBO Tech has as of March is close to 1,285 crores. So fairly well funded to pay for this acquisition as well. Scalability and operational synergies are something that we'll watch out for going forward.
Mangalam, thank you for that. TBO Tech ending 15% higher on the back of that acquisition. Of course, the sector that shone bright today was the metals index, largely on the back of China's commitment to adopt an expansionary fiscal and monetary policies. Manisha is here to tell us what are some of the other key triggers for these metal names. Manisha.
Well, metals clearly have been the top gaining sector today. And when you look at overall underlying metals, many of them are trading at a multi-week, even multi-month highs. The China has pledged further expansionary fiscal and monetary policies, and that clearly has been supportive for the markets. And in any case, going forward, when you look at the supplies or inventories seem to be declining, and the demand from traditional as well as segments like EVs, AIs, green technology, renewables is expected to increase going forward from here. That clearly has been supportive. Also supporting the metals is the dollar index, which is trading at a 5-week close right now. So you have the copper prices trading at a 1-month highs. Zinc is holding a 5-week highs right now. Steel prices also have been on a rise after China is looking to curb production for the season 2025-26. Already, when you look at this crude steel output, that has seen a decline of 3.1% for the time of between Jan to July 2025. Not just steel, iron ore prices have been on a rise as well. If you look at Rio Tinto, that has suspended operations at its Simandou mine in Guinea, and that has led to some supply concerns coming in from there as well. Markets do believe that if China comes out for any more stimulus measures, you could be looking at a further leg up in case of metals.
Worst of the tariff impact on growth and inflation is past. So we're kind of rolling cautious on base metals near term, but very, very bullish on, in particular, aluminium, but also copper on a 12 to 24 month view. So heading into the midterms and with lower interest rates globally, we do expect a pickup in global growth. They've got a lot of exposure to decarbonization as well as AI and data center related demand. And they have practically no supply growth, these markets, copper and aluminium. So they're set up for when the global economy turns, they're set up for super bullish markets. Copper, you can be talking about on that kind of time frame, $11,000 to $12,000. Aluminium, you can be talking about easily $3,000 plus.
All right, that explains why all of these metal counters were up and away in trade today. Mayuresh and Shrikant, thank you so much for joining in with us. With that, it's time for a very short break. Now, on the other side, we get you top corporate voices and key events to watch out for tomorrow's trading session.
You're still with us here on Markets Forward. On to some key corporate voices from the day. First up is CEAT, and the management, while commenting on the Camso acquisition, said that it is expecting this acquisition to increase its turnover by 10%. It added that it will cater to the North American and European markets, adding that it is open for more acquisitions and opportunities for the same. Now, that's not all. It expects to continue double-digit growth in FY26, and the management also believes that the GST rate rationalization will be a long-term positive for the tire industry. Now, commenting on the US tariffs, CEAT says that the exports of off-highway tires from India to the US will come to a standstill if duties remain at 50%.
Well, next up is Urban Company, which recently received SEBI's approval for an IPO. The 1,900 crore rupees IPO is set to open on the 10th of September. Now, speaking to CNBC TV18, the management says the company hopes to maintain its focus on operating leverage, cost excellence, and to scale with profitability. Adds it wants to invest in technology, training, service professional excellence, and brand building. They further expect to see sustained margin expansion every year. And before we wrap, we bring you some key market events to watch out for. Gaurav is standing by with the key events to focus on for tomorrow's trading session. Gaurav?
Well, yes. From the global markets, we will be watching out on the European region. Ministers of Energy are going to meet and they will discuss some key events in regards to the clean energy segment. So definitely we'll watch out on that. But on the Indian front, the key event to watch out is the GST meet. Now, it will happen on September 3rd and 4th. And Street is very optimistic about this meet, given that they're expecting 2 slab rates in India in regard to the GST that we currently follow in 4 slabs. Other than that, PM Narendra Modi is going to meet Singapore's PM Lawrence Wong. They will be discussing and they will be having a bilateral talk during this meet. So definitely that is something that we should be watching out for. Semicon India, now this is again a key event to watch out for tomorrow. And next, on the stock specific, we will be watching out on Bluestone. This newly listed entity will come up with the results of first quarter FY26, and we will also be watching out on Rolex Rings, because there is going to be a board meeting where company will consider and discuss about stock split. So definitely these stocks are going to be on our radar tomorrow.
Interesting, Gaurav. Thank you for that update. And with that, we call time on this edition of Markets Forward. From Amakshi and me, thank you for watching. More news and updates continue on the other side.
And worse become costly.